Good evening. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. A quick look as to how the markets panned out this Monday before we take you through the top headlines. Well, it turned out to be a pretty okay day of trade in terms of the tight range that we were captured in, a 30-point band. You had the market breadth, which turned out to be fairly negative by the day's close. You had the GDP data, which was scaled lower as well, as the midterm economic review was declared. For the markets, though, you had the Nifty, which was at 58.57 by the day's close, close to the lower point of the day, and the Sensex down 72 points, 19,244 is where we shut shop. We keep you abreast with all of the top stories after the headlines. The government reduces the FY13 growth projection to 5.9%. The mid-year economic review retains the fiscal deficit target of 5.3%, but the Finance Minister's Chief Economic Advisor Raghuram Rajan admits that it will be a challenge. The central bank is unlikely to cut key interest rates in tomorrow's mid-quarter policy review. An ET Now poll suggests that the RBI may not even cut the cash reserve ratio. Vijay Mallya meets Kingfisher Airlines bankers even as the talks of a stake sale in the Middle East-based Etihad Airways gathers momentum. CEO Sanjay Agarwal and Group CFO Ravi Nedugadi also part of the discussion. Maldives appoints an arbitrator to decide on the compensation to GMR for the cancellation of the airport contract. Sources tell ET Now that the Indian company is unlikely to get any compensation as the contract was illegal. Gujarat Assembly polls will come to a close today. Voting for 95 constituencies currently is underway after the massive turnout in the first phase. The results will be announced on Thursday. Those were the top headlines, but to our top story, where the government did table the mid-year economic review in Parliament today. It has in fact cut the FY13 GDP forecast to 5.9% versus 7.85% earlier. The government expects inflation to moderate to 6.8 to 7% by the end of March. Let's take it straight to Mrinalini Krishna, who now joins in with the latest details. Mrinalini.
That's right, Avan. The Finance Minister did table the mid-year economic review before the Parliament today, and as you rightly mentioned, the forecast for GDP for FY13 has been cut to into the range of 5.7 to 5.9% versus the 7.6% plus minus 0.25% as had been put forth in the budget this year. It's of course a steep cut, but the government believes that the slowdown is bottoming out, and that is the reason they've given a 5.7 to 5.9 kind of forecast. As far as inflation is concerned, they have said that they expect inflation to come down to between 6.8 to 7% by March, and it's a good sign that inflation is trending downwards. As far as the fiscal deficit is concerned, the government is it's confident of meeting that 5.3% fiscal deficit target. However, it's going to be challenging because some of the receipts are not going to be realized in full. There's the 2G auction receipts that are going to be lower. There's still some bit of uncertainty as far as the divestment program is concerned, and of course there may be a marginal slippage as far as tax revenues are concerned. So that on that account, while the 5.3% fiscal deficit target is tough, the government is confident of meeting that. As far as current account deficit is concerned, the government believes through this report that it will be lower than what we've seen, 4.2% of GDP last year. Its hope, and the major factors driving it, of course, are the crude and the gold imports, and the government will be looking at measures to bring down gold imports. But let's hear out what the Chief Economic Advisor and the author of this mid-year economic review report, Raghuram Rajan, had to say after this report was tabled in the Parliament.
Well, the focus obviously first is in meeting the target that the Finance Minister has laid out, which is 5.3%. But also, I think it would add confidence if it, looking forward, gave the investor community, the public, a sense that the path that the Finance Minister has laid out for fiscal consolidation is also achievable. So the more the budget sort of gives you a sense that all this can be done, I think the better it is certainly for the country and its and the various constituencies that are looking at it. We will have to find measures to substitute. I mean, again, the bottom line is slow growth tends to reduce the tax intake, and so we can't do anything about it other than start trying to take measures to revive growth. But then we have to compensate for some of those shortfalls.
Meantime, officials from ratings agency Fitch visited North Block today to review India's sovereign ratings with top finance ministry officials. Some concern raised included the high fiscal deficit, the high inflation, a structural decline in the growth rate and relatively weak economic data. Fitch expects the economic recovery to remain shallow and their rating for India stands at BBB negative with a negative investment outlook. They believe India's growth potential may gradually deteriorate further if the government fails to speed up reforms and narrow the budget deficit. Montek Singh Ahluwalia, the Deputy Chairman of the Planning Commission, expects that growth will pick up in the second half of FY13. In an exclusive chat with ET Now's Nitya Balakrishnan, Mr. Ahluwalia says the Indian economy has bottomed out and that a CRR cut from the RBI is needed in order to revive the growth cycle.
The second half is going to be a lot better than the first half because the first half GDP average was around 5.4. So if the finance ministry is projecting 5.9, what it means is they expect GDP in the second half to be a lot better than 5.4. I think that's correct. It will be better. I do believe that the economy has bottomed out, but of course what it will be depends on how fast we start recovering.
Seeing inflation, the likelihood of it cooling off. Now, I know you would not comment on what the RBI should do, but do you think the pitch for, a softening of rates is made a very strong case for a rate cut from the RBI? Do you think that's made?
To support a revival, we may need more resources in the system. That brings in the issue of the CRR. And not so much the repo rate.
Is 30,000 crore going to be a challenge that is not going to actually be achieved?
Well, I'm not sure how important a particular number is. I mean, it's very clear that the finance ministry and the government are quite determined to rebuild the momentum on the sale of public sector equity. Whether they reach 30,000 or not is not the important thing. The important thing is that we're not saying, unless we can reach X or Y price, we shouldn't sell. We'll gain when markets are soaring, and we may not gain so much when they're not.
Meantime, the Reserve Bank of India is all set to release its mid-quarter review of the monetary policy tomorrow, in the backdrop of high inflation and a recovery in the industrial growth. Now, though hopes of a rate cut may be building up in the system, not very many are expecting the Reserve Bank to move on key rates this time around. Simran Gill has polled treasury managers across 20 banks and financial institutions, and he's here with the details.
With the inflation numbers and the IIP numbers coming as a positive surprise last week, a few section of the market is expecting maybe RBI will cut rates in tomorrow's policy. But an ET Now poll suggests otherwise. Majority is not expecting any kind of easing by RBI in tomorrow's policy. And even most of them are not expecting any kind of easing even on the CRR front, despite a tightness in the liquidity in the system right now, because majority is expecting that RBI will continue to use OMOs as a preferred route to address the tightness in the liquidity at the moment. And of course, as far as the rate cut cycle is concerned, majority is expecting that the rate cut cycle will begin from Jan policy, and most are expecting that RBI will cut close to 50 basis points till March 2013. And of course, as far as inflation is concerned, majority is expecting that inflation will reach RBI's projection of 7% by March 2013, and bond yields will also ease a bit, and they will be somewhere below the 8% mark. And of course, as far as the credit growth is concerned, that is something that is of bit of a concern right now. Despite the festive season, there hasn't been really a major uptick in credit growth, but most are expecting that somehow the banking industry will reach the RBI's projection of 16% for credit growth for the year. And deposit growth is something that will continue to remain muted, and it will lag, and it will be somewhere below 15%. So certainly, whatever kind of easing does happen tomorrow will be, of course, a positive surprise for the market, but something that the market will be watching out for is to see whether Governor Subbarao will continue to stick to his dovish stance that he had taken in the October policy.
Okay, let's also hear out some industry leaders on what they expect from the Reserve Bank of India tomorrow.
Consensus seems to be that a rate cut may not really hurt, but it may actually spur the sentiment for growth. And therefore, if a rate cut does happen, I think it will be welcomed by the entire industry.
If I was to look at where interest rates will be in March of 2013, which is what, 3.5 months from now, In my view, RBI will cut rates by about 50 basis points.
There's unlikely to be anything on the rate front, although I am hopeful that there could be a further 25 basis points cut in the CRR.
Our view is that between now and March, we can see about 50 basis points repo rate cut in totality.
Rate cut is possible. So I think one expects the beginning of the rate cut cycle to start with this credit policy.
To the equity markets, then it was a very quiet day of trade. We were confined to a 30-point range when you had the broader markets this time around, which really showed you quite a bit of strength. So for the day, it was down by 0.3% for the benchmark indices. The broader markets did outperform and were in the green by the day's close. So that was the mid-cap index up by 0.5%, the small-cap index giving it company. On the way down, it was technology and IT which really suffered. You had rate sensitives, the likes of the metals pack, as well as select auto counters, which really did well for themselves. So some of the big index losers today included the likes of Bharti Airtel. TCS was weak. You had BPCL, which was down and out, and BHEL too lost out close to 1.5%. Some stocks in focus today. Fortis Healthcare up first. It was up by a good 7% as its Singapore arm will be selling a 64% stake to an Aussie unit to UK-based Bupa. We had the management on the channel who also confirmed the news. Panacea Biotech from the same sector won an oral polio vaccine order supply worth 187 crore rupees. That went down well with the company and it was higher by 6% by the day's close, 7% higher. A very illiquid stock, not really talked about too much, Micro Technologies, that won a mega tender order for a UID Aadhaar project. On the back of very strong volume action, you could see quite a bit of price build up as well. So 11% higher for that one by the day's close. Apart from that, in the limelight on the downside, there have been quite a few worries which have been surrounding IRB Infra with respect to the promoters and the CBI. The promoters also released 43.2 lakh pledge shares today, but down by 7.5%. From the banking arena, Axis Bank was in focus. They plan to raise Tier 1 capital and sell shares worth 4.85 crore rupees via GDR or the QIP issue. Watch out for this one and the news that does emerge. Really, stocks today really did well for themselves. The likes of a Kolte Patil was up a good 19%. DB Realty, Brigade Enterprises, Anantraj Industries were some of the other counters that really did well for themselves. A Honeywell Auto on the back of a good response to their offer for sale was higher by a good 16%. Wheels India, another one, hit a new high of 967. It's looking to raise close to 100 crore rupees. From the aviation pack, Jet Airways was up and about. It's likely to announce a stake sale this week with Etihad Airways. It did fairly well for itself, but then tempered off by the day's close, nonetheless in the green. Some of the other index gainers, it was real metal stocks all the way. So Hindalco, Sesa Goa featuring on that list, JSPL2 giving it company, and from defensives, Cipla was higher by 1.5%. Well, on that note, it was another sluggish day of trade. Let's get in some market experts with their top investment ideas.
The foreign investor has been a big buyer in the market, and because there have been no significant IPOs other than the last month, there's no floating stock available because all that is being mopped up by the FIs. So then, in order to move the prices, even a small bit of buying will move the prices, which is what we're seeing happening, and which is why I'm bullish for the early part of January 2013.
So I would say that 2012 hasn't been volatile. The base on which 2012 rally was built was on really low valuations, but also a belief that, policy was not supportive of markets. Now we have moved out of a phase of low valuations. We have moved to a phase where valuations are reasonable but not cheap. But the outlook towards the markets are more positive at this point of time. But our belief is 2013 will be much more volatile than 2000.
The aviation space has been a buzz, and Vijay Mallya, the owner of cash-strapped Kingfisher Airlines, is meeting with bankers as we speak. The meet is to chart out what could be a last-ditch attempt to protect Kingfisher Airlines' 7,500 crore rupee exposure. Let's take it straight to Anirudh Ghosh, who now joins us with the latest details. Anirudh.
bankers have been, expecting the Kingfisher management to bring in capital. In fact, the SBI chairman has gone on record saying that the airline needs as much as $1 billion to get back to to get back to a situation where it could fly again. So clearly, capital is the need of the hour for Kingfisher. Bankers are refusing to bring in any further capital unless the promoter brings in capital of his own. And of course, the only lifeline for Kingfisher could be a possible stake sale. And of course, we have heard very strong rumors and reports of that particular stake sale, going through. It has been reported that they are in talks with Etihad for a possible deal. So clearly, what we need to look out for is whether the Kingfisher management gives bankers any particular details as to whether that deal is going to go through or not, what the status of that deal is, or whether the management is going to be bringing any further capital from its own end. If at all these things don't happen, bankers have been very clear that they are going to be placing a deadline on Kingfisher, failing which they would actually have no choice but to actually liquidate the assets that they have. Of course, that is not a very viable option for them, given the fact that these assets aren't going to fetch them too much money. It's going to only be a fraction of the 7,500 crore rupees that Kingfisher owes the consortium of banks.
Thanks very much, Anirudh, for those details. And as you saw, the stock price really took a beating in today's session. Meantime, in the infra space, GMR's Malé woes seem to be far from over. The Maldives government has now asked the company to appoint an arbitrator to assess the $800 million compensation claim made by the infra major. Suchetna Ray now joins in with the latest details. Suchetna, what are you picking up?
This is perhaps the biggest blow to GMR so far in what has been happening in Maldives regarding the Malé airport contract, because sources in Mohammed Hassan's government tell us that since they have termed this entire contract of the Malé airport that has been held by GMR and MAHB, a Malaysian company, as illegal, so therefore the Maldivian government believes that no dues are pending to GMR. Remember, GMR sometime back had written a letter to Maldives claiming that $800 million is what is due to GMR for this entire cancellation process. Remember, GMR is basing this entire figure on a calculation made by the Attorney General of Maldives himself. He calculated the figure at 700 million, and that is what GMR has said. They have calculated it 800 million, but sources in Maldivian government tell us that nothing is due to GMR as far as they are concerned. Though they have appointed an arbitrator, they've also sent a notice to GMR asking them to also appoint their independent arbitrator to come at a figure of what is due to GMR. But so far as the Maldives government is concerned, they are not agreeable to setting up a joint arbitrator along with GMR. According to them, nothing is due to GMR. We did speak to the Indian infrastructure major. They tell us that they are in the process of appointing an arbitrator and will be getting in touch with the Maldivian government soon.
Thanks very much, Suchetna, for giving us all of those details. So no compensation perhaps for a GMR infra. Meantime, Coal India, electricity regulator CEA and officials of the Power and Coal Ministries will meet Paulak Chatterjee, Principal Secretary to the Prime Minister, later this evening. Now, this will be in order to address the issues of the coal supply to the power sector and fine-tuning some of the issues relating to pending fuel contracts. Nithya Balakrishnan is with us from New Delhi with more details. Nithya, what exactly is on the agenda for this meeting, and will pooling prices of coal actually be discussed?
Well, Ivan, clearly there are two things that are high on the agenda of, the meeting that's currently underway as we speak. And right on top of that list is, remember, out of 90-odd fuel supply contracts, only 40 are signed. There are more than 50% of them still pending to be signed. And as far as the power companies are concerned, the MOUs stand to expire on the 31st of December when it comes to coal supply. So post that, if they have not come on board and actually signed the FSAs with Coal India, they stand to lose fuel supply. It will be interesting to note whether this meeting actually decides and asks Coal India to extend that deadline till, all parties are in absolute agreement to go ahead and sign fuel supply agreements. Now, the second more crucial thing that is on the agenda, of course, is addressing the issue of pool pricing when it comes to imported and domestic coal. Now, clearly, they have indicated 40 to 50 million ton deficit for this year. They are looking to import this much of coal, but Coal India wants a cost-plus basis for the imported coal. They're trying to work out a mechanism. CEA and Coal India in its earlier draft has indicated 8 to 21% of coal prices increase for the power sector. So the methodology of this will be fine-tuned in today's meeting, we're given to understand. And of course, this will be taken to cabinet finally, is what we're given to understand from sources. But if any crucial
controversial decisions on these two items. Definitely, this will be a meeting to keep a close eye on indeed, Aman.
It certainly will. Many thanks, Nitya, for keeping us abreast with those details. So some important details to watch out for. Now, voting for the second and final phase of the Assembly elections in Gujarat has begun. About 38% average polling was recorded across 95 constituencies in Gujarat in the first 5 hours of the final phase of voting. Remember, it will decide the fate of 820 candidates, including Chief Minister Narendra Modi, who is contesting from Maninagar Assembly constituency. Now, he is locked in a direct contest with Congress candidate Shweta Bhatt, wife of suspended IPS officer Sanjeev Bhatt. The counting of votes will be taken up on the 20th of this month. Staying with the political arena, and the BJP on Monday demanded the cancellation of the upcoming IndoPak cricket series in the wake of visiting Pakistan Interior Minister Rahman Malik insulting India. The party also accused Home Minister Sushil Kumar Shinde of remaining silent by not responding appropriately to those statements, which triggered a big controversy by equating the 26/11 Mumbai attacks with the Babri Masjid demolition and describing LET's terrorist Abu Jundal as an operative of Indian intelligence agency. Senior BJP leader Yashwant Sinha and Venkaiah Naidu questioned the kind of goodwill India will create post Malik's comments, demanding a cancellation.
I raised it in Lok Sabha. The point I made was that here is this Interior Minister of Pakistan. He comes here on our invitation and then issues one statement after another, which is highly provocative, which is highly insulting to India.
If you want to play, you must have minimum good relationship. Now, if somebody is sending terrorists, somebody is indulging in drug trafficking, somebody is indulging in fake note currency, somebody is indulging in misleading the country, and then protecting the culprits of 26/11, and then you just want to play with them. I don't think both will go together.
On that note, we wrap it up right here on Business Day. Thanks so much for watching. Keep it with ET Now.